Now we're going to turn it over to mining. So we've got a panel on Bitcoin mining, one of my favorite topics in the Bitcoin space. Really amazing when you think about it, a system that allows anybody in the world to compete for the new money issuance of the Bitcoin protocol. Every 10 minutes, 6.25 Bitcoin are being created and distributed around the globe through a computer system. Really quite amazing stuff. People may not know that you used to be able to mine on a home computer back in the day, the CPU of your computer. You could buy a little USB stick this big. It could get you 50 Bitcoins. So mining really quite an amazing story, and it really speaks to the advances of the industry, how far it's come, that this hobbyist community is now in data centers, some of the largest in the world. And another fun fact, Bitcoin mining, if you added up all the computers, one of the largest supercomputers in the world. So when people like Adam Back describe Bitcoin as a wonder of the world, that is a great data point. Anyway, I'm going to turn it over to our great panel here. We've got a lineup of experts who are really going to dive deep into Bitcoin mining, the next industrial revolution. Forget the FUD that you might have heard. These guys are going to give you the take on how they're seeing the industry and how they're going to see it develop. First up, we've got Ben Gangan, Chief Mining Officer at Bitfarms. Welcome to the stage, Ben. Next, we've got Amanda Fabiano, Head of Mining at Galaxy Digital. Next, Kevin Zhang, VP of Business Development at Foundry Digital, up-and-coming firm. Next, we've got Russell Can, Chief Client Success Officer at Core Scientific. And last but not least, you may have recognized him from the cover of Forbes magazine, Matt Roszak, Chairman of Titan. Matt, floor is yours.
Can't see shit.
All right. Thanks, Peter, and great to be here. So we're going to talk about mining today. And I remember when I first read Satoshi's white paper, I started to dig into this mining component, and it was like the first thing that came to my mind was like this golden goose that drops these golden eggs called Bitcoin. And I think it's like very apropos to how it kind of operates. And then today, fast forward to 2021, that golden goose drops 900 Bitcoins a day. That's about 35 million a day, and about 12.5 billion annualized. So the eggs are pretty amazing these days. So let's quickly go up and down the panel and give a brief introduction, and then we're going to kick into the discussion. So Ben, why don't you kick us off?
Sure. Hi, I'm Ben Gagnon. I'm the Chief Mining Officer for Bitfarms. We are a publicly traded Bitcoin mining company based in Quebec, Canada, currently traded on the Toronto Stock Exchange, and will be listed on the NASDAQ in a couple of weeks. We have about 1% of the Bitcoin network on 69 megawatts of green hydropower, and I've been in Bitcoin since 2010, and I've been mining since 2015.
Hi, I'm Amanda Fabiano. I'm the head of mining at Galaxy Digital. Galaxy Digital is a diversified financial service company with 5 business lines, and mining being one of them. I have been mining since 2016, 2017 timeframe. Before Galaxy, I was the director of Bitcoin mining at Fidelity Investments.
Hi, I'm Kevin Zhang, the VP of Business Development at Foundry Digital, which is the 4th wholly owned subsidiary of DCG. We are DCG's play in the decentralized infrastructure. We focus on both proof of work and proof of stake. My history and background is in building large-scale mining facilities all around the world, starting off in North America, and super happy to be talking about Bitcoin mining today.
I'm Russell Can with Core Scientific. At Core, we are a large infrastructure company. We operate hundreds of megawatts of mining capacity for ourselves and for others. We are a big hosting provider in North America, and we operate in multiple states.
Awesome. So we're going to kick off with kind of 4 topic areas. Is Bitcoin green? Talk about China. Talk about the financialization of Bitcoin. And then kind of innovations, like what's around the corner in this Bitcoin mining space. So let's kick it off on, is Bitcoin green, right? We've seen in Bitcoin the fundamentals being very strong, but the narratives being kind of weak. And we saw that playing out with Elon and a lot of the stuff that was happening in terms of, is Bitcoin green? And I've seen statistics going from 50% to 76% using renewables, so kind of hydro, green energy, etc. So Bitcoin is already kind of green. And then if you kind of fast forward it, there's this Darwinian incentive for you to go out and find the cheapest source of energy, which is typically green. So are we just on a cusp of a super cycle of green energy investment, a new customer for the renewable industry in Bitcoin? How do you guys look at this?
Bitcoin is very, very green, especially compared to most other industries. We have a lot of different incentives that Bitcoin brings to energy markets, and that's the most interesting part. It's the reason why Bitcoin got so big in China was because they had all this excess hydropower in Sichuan that didn't have any other industrial use. And so Bitcoin miners came in there and soaked it up. There's no transmission lines that carries it to the coast, but they built all this infrastructure over several decades. So most of that electricity was actually being wasted for a long, long time. And Bitcoin miners actually finally monetized and put it to good use. I'd say the biggest waste of energy and the least green energy is the energy that's created and destroyed and wasted. That's a big problem. And what Bitcoin mining does is it provides incentive to avoid that. So one of the things I think is most interesting about the energy debate is that you never hear about Bitcoin mining's incentives for flare gas mitigation or vented gas mitigation. This is by far the most economical and powerful technology for reducing emissions in the world, bar none. So if your goal is to reduce emissions, then Bitcoin mining is the way to do that through these flare gas and vented gas situations, which are ongoing and pervasive. But you won't see anybody talking about that because it's not the narrative that they want to put forward.
Yeah, I would say what usually ends up happening is that you can see how much energy the Bitcoin network uses at any time. So we can audit the network and say, hey, Bitcoin uses this much energy. And that amount really scares people. But when you compare it to other industries, it's really difficult to see how much energy each industry uses. And it really does come down to the utility of Bitcoin. Do we think that Bitcoin is useful? And if you do, the energy usage is something that you can get behind. I agree with you on the gas flare mitigation. And how I look at it is, like you were saying, Matt, over time, you have to be on the low end of the cost curve because you are in competition with every other Bitcoin miner. So if you are on the low end of the cost curve, which is things like flare mitigation and greener sources of energy, you're going to win as a Bitcoin miner.
Yeah, to piggyback off of what Ben and Amanda said, I absolutely agree that Bitcoin mining's got this ruthless drive of cost efficiency. And I think what's really hurting the narrative is actually lack of transparency in the data. Historically, many of the mining pools have not been the most upfront and forthcoming with their participants and where all the mining energy mixes are coming from. And if you were to dig into the data, you'll see that majority of it is renewable. It is a lot of stranded power. So part of changing the narrative is actually getting access to that data, putting out better research. I know Galaxy's doing a great job of that. Bitfarms, all of your energy mix is hydro.
Yep, 100%.
But most people don't know this, right? So at Foundry, we do have a mining pool, and we're looking forward to putting out our research and the data that we're getting access to kind of fight back against this energy flood narrative.
So Matt, at core, end of this year, we'll have 550 megawatts mining. Not a small amount. And next year, it's going to be a lot more. So I can speak with some authority on power and power infrastructure. And you guys have nailed it. When we deal with TVA, Duke, Southern Company, all those guys, they have to sell us power at such a low rate. The only way they can produce it cheap enough to sell it to us comes from carbon neutral. We're 100% carbon neutral, by the way. So 550 megawatts, 100% carbon neutral. That's because it's got to come from renewable. It might can come from nuclear as well, which is also a very inexpensive source of power. And those are really the only two things. So if I look out into the future, and this is just me talking, if I look out into the future, you're going to see Bitcoin mining leading the way on renewable energy. And it's going to be folks coming in and building a 300 megawatt solar farm and then pulling off the grid at night. And because during the day, the rest of industry uses power, so the solar farm will fund it. You're going to find that because, as Amanda said, to be competitive globally on the Bitcoin network, your power has to be cheap. So we're naturally going to be green. Not because we want to be, because we have to be. Yep. There's another important point, and it played out, regrettably, in Texas in the wintertime. And that's grid stability. At Core, we've now been dealing with some of the largest power producers on the planet. And after a few years, they've learned that we are their grid stability play. So instead of building a natural gas peak plant in order to make sure that Charlotte Banking Center has enough air conditioning in the middle of July, they can actually run much more efficient hydro, solar, wind, not North Carolina, but they can have those much more efficient systems and then curtail And at Core or anywhere else, when you're crypto mining, you can curtail without it costing someone lives. They did it in Texas. There was 400 megawatts of mining going on in Texas when the winter froze up. Those 400 megawatts all turned off. All that power went back to the grid. Now it was used to cycle through, heat and everything. But that grid stability play is another piece that we need to talk about. And at least in North America, we can use that. And the big power companies, the big power infrastructure companies are realizing that now. So instead of building all this peak plant and having all this peak capacity or even buying off the grid, they can have the most efficient system possible and then work with the big crypto miners to do that.
Are power companies waking up and smelling the Bitcoin?
Yeah.
Absolutely.
Yes.
Yep. I think there's going to be two trends that we see. I think we'll see more transparency as more miners grow into North America. So even for the public mining company announcements that they've had, it will account for over 20% of the network, the current network. And all the public mining companies are sharing what they're doing and what their energy sources are. So in North America specifically, I think we'll see more transparency. And then I do think that there is going to be this natural convergence of energy and Bitcoin mining, those two industries working together. We're already seeing that happen, a lot of energy companies calling us and asking about Bitcoin mining.
So how do we square off the Elon Musk tweets on Bitcoin's mining dynamics? It's like it's too good of a conspiracy to not think this through, whereby, oh, it's not green, I'm going to pull back. It creates this super cycle of Bitcoin being green, investing in renewables, creating a super cycle for renewables thanks to Bitcoin. And yeah, doesn't he sell solar panels and battery packs and the rest of it? Kind of an interesting conspiracy theory. I kind of love that.
He's a smart guy.
Yeah. So let's switch gears to China. So in 2017, the Chinese government pushed a lot of exchanges outside of its borders. That's one of the reasons Binance benefited so well during that time frame, because it captured a lot of that volume. Now, there's an interesting, eerie similarity with mining, where the Chinese government is saying this is not no longer an activity that is condoned. And so that's getting pushed out. So what's happening kind of on the ground in China, and then how do you guys as practitioners and professionals in this space absorb some of that energy, whether it's hash rate, money, other dynamics?
Yeah, there's a lot of interest coming out of China right now for hosting inside North America or inside Europe. They're looking for other jurisdictions, and I think this is a boon for Bitcoin. And it brings up a really interesting point with regards to how the market works. The Bitcoin price is basically unlimited potential. It can do whatever it wants, right? But with the hardware, it's very, very fixed and linear in terms of how quickly that can be manufactured, how it can be distributed and installed and turned online and be made productive. We have huge, huge timelines to do that now, especially with COVID. So I think there is an opportunity for North American companies and European companies to start absorbing some of that and bringing in these Chinese customers. They'll have some geo-diversification in their risk portfolio by moving their equipment elsewhere. But at the same time, I still find it hard to believe that mining will stop in China. It's been going on there for so long, and it provides such a great economic value to the communities that it's operating in. It's really hard to imagine that the local governments are going to want to shut that down.
So from my perspective, I've been talking to a lot of Chinese miners that are thinking about moving hash rate offline. I think that there's two things that will be risk factors for them. One, when you import machines from China, there's a 28% tax for it to come to the US, which is a massive amount of money when you're thinking about running a mining operation. And then two, usually the co-location costs in the US are a little bit higher than the co-location costs in China. So I think that those two things will be limiting factors. But I still do think that there will be diversification, and it will be eventually good for Bitcoin. If we think about what happened a couple months ago when the coal plant turned offline, about 20% of the Bitcoin network shut off. And it was all because it was, mining machines in China, and all, going to that one source of energy. So I think that it would be really great to have more diversification on Bitcoin mining, but I think there are still some challenges for, Chinese miners to face when they're coming to North America.
Yeah.
Yeah. So the China Bitcoin banning mining, it's a fascinating topic because it's very cyclical. History repeats itself. So what we typically see is anytime retail speculation and retail interest picks up in China, China has to flex that they are in control. That's the kind of the basis of the government's kind of control. So as such, this was a couple of weeks ago, CCTV, which is the state-ran news channel in China, broadcasting to billions of people, when they were doing a 30-minute segment on doggy coins and the thousands of percents of returns you can get. I think that's when it was kind of a signal that, okay, the central government, they're going to come in and issue some announcements on their stance on Bitcoin. So what we have now is the central government is saying crypto and Bitcoin these currencies, they aren't backed by anything, they're not real assets, this and that. And as such, the intense amount of hardware and energy consumption used to support the proof of work protocols, that's a waste of energy. That being said, the local governments at the 4 main provinces that mine, Inner Mongolia, Xinjiang, Sichuan, and Yunnan, they've approached it all very differently. So Inner Mongolia, they actually have banned mining, right? It's predominantly coal driven up there, and it's not so much on the energy side. I think that's more the PR take for why they're closing mining up there. The real reason is because when they built all these high-tech data centers and facilities, and they wanted to attract more kind of blue chip business and the FANG companies to go in and build their data centers, what ended up happening was you had Bitcoin miners building at very, very low cost and hardly creating any jobs, making these very cost-efficient mining facilities. So that was one of the reasons that they actually banned mining in Inner Mongolia, not because it was using so much coal power. Now, the real question now goes back to Sichuan. So right now, we're at the beginning of wet season in China. This is where hydropower becomes much more abundant and energy prices go much lower, and which supports all the different points we're talking about earlier. The central government, once again, says they want to kind of limit and kind of control Bitcoin and cryptocurrency activities, especially with mining. But the Sichuan locals, they have all this abundancy of power that's otherwise stranded. There's somewhere between 3,000 to 4,000 hydro dams in Sichuan. And that's a significant amount of power that goes to waste, especially during wet season. So the Bitcoin miners, they're sitting by, waiting for further announcements on whether or not Bitcoin mining actually is allowed, because there's definitely miscommunication and disconnect between the central government and the local.
And they have until like September, October. So one of the areas of time that I'm going to keep an eye on is that time frame, September, October, to see what happens with the hash rate and if it gets distributed into different places.
Yeah. The one thing I will add is like the hash rate right now is actually a little bit lower because the wet season's been slow to start. So it's a combination of, are they actually allowed to mine or aren't they allowed to mine? And also the rain has been actually slow to come this season.
Yeah, Kevin covered most of the important points, especially about the lift and shift that happens, which goes back to the green Bitcoin thing. In China, they have so much hydropower, and they're chasing that excess power Ben talked about. So we got to realize that's a lot of green energy there. But I also want to say this: we don't want China to ban mining. We need Chinese mining, just like we need North American mining, we need Russian mining, we need European mining. For the Bitcoin network, being distributed globally is what we want. We just don't want as much mining in China as we've had, not 70-something%. So, and we see that migration happening right now into North America. And as we balance out the global Bitcoin network, it's actually better for the whole Bitcoin network.
Yeah. Helps with decentralization.
Yeah.
Just to touch on that really quickly, we have the same situation in Quebec that we have in Sichuan. The entire province is loaded with hydro dams that have been built up over several decades, and a lot of that is excess power too. So that gets transmitted on high voltage electric lines, 1,000 miles down to the US, and when it does that, it loses huge amounts of electricity in that transmission, right? That is complete waste that we can do nothing about, right? At least here, we're taking advantage of it. We're monetizing and using the full amount locally before it gets transmitted and wasted.
So Bitcoin mining has gone from hobbyist, you plug in your laptop and you mine, maybe you buy mining equipment, you make a little bit more, you buy more mining equipment. So it went from hobbyist to kind of more professionalized, where people did this at scale. And now it feels like it's getting industrialized. There's 20 public companies that are mining Bitcoin. There's probably another 10 filed or kind of around the corner. So the industrialization of Bitcoin mining is upon us. And in many ways, you take a step back, it's a massive project finance exercise. Get capital, get a facility, get the stuff, plug in the power, mine Bitcoin. So a lot of that stuff is pretty traditional in the way you piece all that together. It seems like people are figuring out the power side, right? Go where there's cheap power, They're finding, whether it's Wall Street, private equity, to find the capital. That used to be a big struggle to say, I need money to buy this toaster to plug it in and mine Bitcoin. It was, 5 years ago, it was a little strange discussion. But now, it's kind of a well-known financing dynamic. It seems like the hard part is getting the toasters, getting the miners. So the supply and demand dynamics are kicking in. What do you guys think about when you manage access to mining equipment?
I think mining is a very strange economy of scale. It's a very strong U-shape where it makes sense at a really, really small scale where you're taking advantage of waste or excess or free electricity in small capacities. And it doesn't make sense at all in the middle because it becomes a really capital-intensive game right now. And the people who have the best access to capital are large-scale firms and institutions. And this is what's really driving the industrial side of it. So makes sense at the small end, doesn't make sense in the middle, makes sense at the very large end. And right now with such high demand for equipment, what we've seen is that the price for equipment has drastically outpaced a lot of the times the actual price for Bitcoin. And that's because people understand what that cash flow is worth going forward, and they're incredibly bullish about what that means for their profitability. So, even with old equipment like S9s, which were largely written off, that had a 30-fold increase in price, while Bitcoin went up, 6. So there's a huge opportunity there, and if you're going to play that game, you really do have to have access to capital, and that's where groups like Foundry and Galaxy are starting to come into play. And groups like ours, who are publicly traded and audited by a Big Four firm, we're going to have greater access to that capital than a small firm that just started up and is trying to get financing for $5 million with no experience and no history.
So I want to add a little bit to what he's talking about there too, because you ask about miners. Right now, you've got Bitmain, MicroBT, they've done a good job of tying up semiconductor manufacturers. They really have. Now they've taken all these huge deposits, a lot from North America, and they've tied up those semiconductors. So and this is my personal opinion, where miners were the scarce thing, we were just talking about backstage, for the next 6 months and really going into 2022, the actual infrastructure to do the mining is going to be tough. Because if we have to build out 100 megawatts of steel and transformers and copper line, we're having to compete with everybody else on the planet that's trying to do that right now. And the pandemic created and if those in the construction business here can tell you this, material costs have gone up tremendously, but it's also increased the timeline.
Great point.
So like right now, if I look even 6 months in the future, machines are there. They're expensive, but they're there. It's the infrastructure and the hosting capacity that's going to be in very tight demand going in the rest of 21 into 2022, and that's without Chinese mining moving out of China and into North America. Mm-hmm. So you compound that when we have someone call and saying, I want to move 30,000 miners there, and you can say, well, I can't turn those on tomorrow because those transformers just aren't available. And the number of companies in the world that make 50 and 100 megawatt transformers for substations, you can count them on your hand. Like, those things just don't happen. You have to close down bridges to move those things in interstates. So, those of us in this business, we realize that, but I don't know the rest of the world does. Like, that is a serious undertaking when you have to do that. We have a guy named Wes Adams at Core that specializes in it, and that guy's been building stuff for 30 years. Like, he knows what he's doing. Like, it is a tough job.
And must be frustrating if you have miners sitting on a pallet not plugged in because you're waiting for that. That's
They're like bananas. They're rotten.
A little unnerving, right?
Yeah.
And then Kevin, you guys have done an amazing job filling the gap with a lot of financing for companies that are aspiring to scale their mining operations. Tell us about that.
Yeah, absolutely. So this was early 2020 when the market's pretty bearish and capital's very dry. So at DCG and at Foundry, we realized that to really help decentralize the hash rate, bring more of it into North America, we have to step up, leverage our balance sheet, our capital, and alleviate a lot of the delivery and execution risk, and help capitalize miners, the credible good actors like the Bitfarms, the world, the Cores, to help them finance and bring mining equipment from China over here to North America. I think Russell touched on a key point, which is now that we've, for the most part, solved the financing and the capital financing piece of it, the trickiest part is the timing, right? Yeah. The lead times for when you get your equipment, you have to order 6 to 9 months out. And then when you're building any facility or site or expanding existing ones, these are very long lead times in North America. Like, everything has to be done above board and by the book. And as such, you have facility studies, system impact studies, all these that take months and months. So coordinating the timing of when you're placing your orders, the delivery of the miners, Like you touched on, Matt, nothing's more painful than having miners sitting on the floor not plugged in. So that's the kind of the big key thing that everyone has to focus on.
The one really interesting thing when you think about financing miners, because Galaxy, we do it too, is there's miners like Bitfarms, right? They'll buy machines future out. And a lot of people want financing now for it, but what's your collateral, right? So you're like, here's money, here's a lot of money for machines that might come 6 months from now. So, that's one thing that has been difficult for us to overcome. So we switched it, and so that's why we started to buy miners, and then we use those miners to, shuffle through to, mining facilities that want more machines, because it's a little bit different than traditional financing.
Yeah, and I remember when you were at Fidelity and Nova was smart enough to bring you on board, and you're solving a lot of pain points on the financing, but you're also getting really deep customers, because all the rest of the financial services that Galaxy has, you can start plugging into that. So it kind of takes us...
ordering machines at Fidelity was a fun one. Yeah, for sure.
No doubt. And so innovation-wise, what are we seeing around the corner on mining? At Titan, we're building a hash rate protocol to create hash rate financial products and derivatives. But that's still kind of on the horizon, right? That's a future state. What are you guys seeing around the corner in terms of innovation in mining, whether it's in infrastructure or anything else? Like, what are we going to see in the next 3 to 5 years?
I think the financial markets are really going to get into mining in a big way. This is the most predictable cash flow in the world. And we have a very, very, clear path forward for 4, 10, 12, 120 years as we get down to the end of the block reward for mining. You can think of Bitcoin as like the atomic clock of finance. There's never been such a predictable asset. And at any point in time in the future, within a small degree of precision, exactly how many are going to exist. And that's never happened before. Now there's some variation with regards to what that's worth, but the finance groups are going to start tearing into this, and they're going to start creating all sorts of interesting derivative products based on that cash flow.
And it'll help you as a miner to manage cash flow and risk and other things.
Absolutely. And it'll give investors greater exposure and decentralize the market, via this proxy.
Short-term immersion. Longer term, it's going to be more purpose-built or purpose-acquired renewable energy sources close to the mining farms. You're going to see miners locate very close to the sources, whether that's a hydro dam, a solar complex, a nuclear plant, or whatever, so you don't have all the loss coming out of the generation. But your immediate stuff, you're going to see, in my humble opinion, you're going to see a lot of folks moving into immersion. It's gotten affordable this generation. It's going to get more affordable. And one of the biggest things we deal with in our industry is heat and having to use passive air to try to cool it. Immersion is going to help solve that problem. And going back to what you said too, we're just going to continue to see the industrialization of it because it just drives efficiency. Yep. A client can call me and host their miners at Core for way less than they can host it in their garage because we're buying the large renewable plant versus it being 12 or 13 cents to run their house power.
So cool. All right, well, we're out of time, and please help me in applauding our panel.